board Rohit Srivastava, who's the founder of Strike Money Analytics and India Charts, who's joining us. Hi, thank you so much for joining us, Rohit. Rohit, if you look at today's trading session, it's really the broader markets that's really shining away in trade. What a recovery coming in the broader market. I want to start by asking about the broader market. We have seen an up move in broader market. We still see expensive valuations as far as mids are concerned. On the charts, do you see more steam left as far as the mid and the small caps are concerned?
So my sense is that the mid and small cap segments are still the weakest part of the market. On a 1 week basis, they have lost a lot more than the Nifty, even if you account for today's bounce back. And that might still be the case going forward. So the whole expectation which was set up in March and April that large caps actually outperform mid caps is still playing out, and I think that trend on a broader scale is not going to change, even though you may get these short-term days of performance or underperformance or outperformance. So I think the best part of the mid cap rally, which was done last year, is still done. It takes at least 6 to 12 months of underperformance before you can actually get performance back into mid and small caps. So it's a bit early to say that they will start beating the large caps again.
All right, bit early for the SMIDs to expect them to start outperforming. But within the benchmark indices, Rohit, what's the view coming in? Because we are definitely in a bit of an uncertain times with the kind of tensions that we are facing. Well, of course, on that front, it's been a victory. But help us understand that in such situations, how the markets have reacted in the past. Because I'm sure with your experience in the markets, you have already done the analysis. You must have already seen the market cycles through these vulnerable times. But give us a sense, how do you see the index moving?
So when we look at a lot of the past events, whether it's Pulwama or whether it's Kargil, we've eventually seen the markets recover. In some cases, it just consolidates during the event and then goes higher. In the case of Kargil, it was down before the event, but once the attacks and the firing started, the markets actually started to recover from there on. So the market does get a sense of what is going on, how far it's going to escalate, and accordingly the setup then plays out. So far that we've seen the markets recover from the lows of. If this doesn't escalate into something extremely bad, I think the downside might just get limited to the 20-day average, which is between 23,700, 23,800 as a worst case scenario. Over a week or so, if this continues. If it ends sooner, of course, it's a different thing. The opposite side of this is whether it can escalate and something happens that causes things to go a little out of control. And in that scenario, you should also be open to the idea that it can drop and retest the lows that we've already done twice. And so that keeps a little room for things to go either way, because right now we are really not pricing in anything negative. It looks like it's only pricing in what we are saying, that okay, this is not an escalation, it's only an retaliation to the attacks that were done. And the market also accordingly is only reacting with some small minor correction so far.
Right. So we do see bounce back perhaps on the anvil, post this minor blip that's come in. But Rohit, tell us talk to us about the defense pack. Defense pack is obviously buzzing in trade. We saw that happen a few days back also for obvious reasons. But we have seen these defense counters move up quite a bit. On the charts, what do you see? Do you see the more up move coming in for defense names?
So I think again in defense also the best part of the defense rally was in the last several years. In terms of their longer term trend, I think they still remain bullish. But what we were anticipating in between is a potential long consolidation phase. Now they have seen a pretty deep correction, which is where we can say, okay, is the consolidation over? But I think it can also take time. So it can be a very wide range in which they can continue to move. These are, of course, short, reactions to news events can be very short term, 1 day, 2 day things. But when we say 6 months to 12 months, I think I still consider defense to be in consolidation before they can make the next leg higher. So I would give it really some time before we anticipate any significant outperformance from the sector.
but what I get a sense from your take is that maybe it's time to be very selective. Please correct me if I'm wrong, but along with that, within the sectoral preferences, which are the preferred sectors right now, given the fact that the SMIDs are not looking that attractive? Maybe it's the large cap where you should nibble in, and there are vulnerable times and there is a lot of uncertainty indeed.
So we will probably roll back to looking at financials which are outperforming. Now, some of the results this time have not been so good. So you're seeing selling, which actually gives you better prices to enter into when you're taking a slightly longer term view.
If you like this video, then like, share and subscribe to ET Now.